You're listening to Pathways and Means, a podcast that inspires and shows people how to tap into their creative spirit. We sit down with leaders and makers in every industry to talk about their process, what inspires them, and about how to build incredible things with the power of creativity. The future belongs to the creators, so come join us. This is Pathways and Means.
Welcome in, ladies and gentlemen. Pathways and Means, we back at it. We're on Spotify now, if you didn't know that. You might be hearing us that way just through the audio, but if you're enjoying the video on our YouTube or our social media, then you will see I am dripping in Topeka swag right now. No disrespect to whatever city you're in if it's not Topeka, but here, Pathways Means we are definitely Topeka strong. So we're dripping and we're dropping, and you know we're not stopping. And if you're not dripping like we're dripping, you got to get with the program, and the program is Pathways and Means. So we're back. We're in the studio right now. We're vibing. We're feeling good. Hope you're feeling good too. We got a massive demand for some more of the Hickster Bill Hickey here in the studio, joining us for a part two. Talk a little bit about finance, a little bit about investment. People were enjoying the conversation the last time. I think we piqued their interest, and now they want to know exactly what they need to be doing. So we're going to get into some specifics on today's program. Bill, how are you doing, my friend?
I'm living the dream. How are you, Ryan?
Doing really well. What did you think of the reception to our last episode? How are you feeling about the fact that the people are out here wanting more?
Oh, it's a great thing. Like I said in the first video, I just want to help people, you know. If I can help people in various ways, fine, but it seems like I have an idea and a gift for helping people how to earn money, and so I'm back. I've had people I know and people I don't know reach out to me asking, they saw the video, they liked it. I talked about, investment and my thoughts on ideas about that. And people said, okay, give us more specifics. And I would too if I watched it, so that's why I'm back.
It's a lot of vindication about the things that we were talking about in the actual episode, how we said that this is a topic that people are interested in, but might not know the details on. And the audience reception to the episode has, I think, proven that there is a real hunger out there for this information. I think people feel like information on high-level finances and investment might be something that's out of their reach, but you and I are here to sort of dispel those rumors, and today we're going to be giving some people some practical tips on how to get started, things that they can do today. So, With that in mind, what do you think we should start with?
Well, income. We all need income. It's very important. Obviously, we all know this. There's a couple differences, categories of income. Earned income is you clock in for a job. You basically give your time and your effort for exchange of a paycheck. That's earned income, earning money, going out and working at a job. There's also passive income, which I was taught a long time ago and learned about the importance of it. And passive income basically is the income you earn by not clocking in somewhere, not having a boss, not having a job. You earn it while you're sleeping. Mm-hmm. It's fabulous.
Naval Ravikant defines wealth as businesses and assets that earn while you sleep.
Yeah, totally.
That's because you can be rich. Being rich is having a lot of money, but if you're wealthy, then you own a lot of wealth, and that wealth makes you more money when you don't have to do it.
Correct. I would much rather be what I am now versus, say, a doctor that's rich but has stress everywhere.
Absolutely.
I don't want that stress.
So looking at income, I think that most people have the situation where they sort of sell their time, as one could think about it. You go in, you do some work, you get some money. But what people are most interested in is that passive income like we're talking about. So if you were somebody who wanted to get started on building some passive income, where do you go?
A lot of ideas, a lot of resources for that. Like the previous video, I would say talk to people you know. Talk to people that are doing that are experiencing, that are living it. Not just me. There's people even here in Topeka that you could talk to that are really good at that stuff. I think first it's kind of good to talk about passive income and kind of give some common ideas and common ways to do it. Passive income, in my opinion, like I said, is money you earn, and also the man you referenced a second ago about earning it while you sleep. Well, common ways. A person can buy a house. You can buy a house. You can become a landlord. You can have a tenant. That income you get from that rent each month is passive income. But is it truly passive income where you don't have to work at it? Yes and no, but sometimes no. You need to paint the house eventually. You need to replace the roof eventually. Let's say you have a tenant that doesn't want to cut the grass, and the agreement is me as the landlord, hypothetically, has to go there every couple of weeks in summer and cut the grass. Mm-hmm. Time, gas, effort involved.
Let's say you have a tenant who maybe messes your house up, and they're on the hook for what they're on the hook for. Yeah. But once all that's said and done, you got a messed up house. You might have holes in the wall and all this stuff, and even if you're not footing the entire bill for it, that's time you're not going to be able to make money on that investment.
Correct, or concrete mix in the toilet when they move out.
Right, that also could happen.
I've heard of that.
That's a very specific example that it sounds like you have some firsthand knowledge of. Hopefully not you doing it.
Not me personally. I have an incredible tenant, incredible best friend that rents the house for me. It's magic. Yeah. But I have heard plenty of people with examples like that. That's stress. Myself, personally, I'm not really good hands-on at like replacing drywall, fixing toilet stuff. Sure. That's not my thing. If you wanted to have an investment property as like a landlord, it's good to have, in my opinion, first of all, you want to be a good hands-on person. If a problem exists in your house, toilet backs up, the electrical breaker goes out, whatever the case is, it's better and cheaper, obviously, to be able to fix that on your own versus having to call someone to do it all the time. Like I said, I have an incredible setup right now with my best friend and tenant. It's awesome.
Yeah.
I'm very blessed. There's other things with real estate too, not all bad. There's definitely good things with real estate too. Real estate is definitely an asset you can use to your advantage. Ways to get passive income, we can talk about maybe a different day. Yeah. But there are some really neat things about real estate too, not just bad.
But like you were talking about, income from real estate or from renting out property that you own can be a powerful way to bolster your wealth, but it also might involve more work on your part or more investment on your part than you were maybe expecting.
And time and stress, correct. Yeah. All that, yes, correct.
So what's maybe an easier, less stressful way of getting to that passive income?
Well, like I said, basically there's common ways for passive income. People can write a book. Any of us can write a book. Is it difficult? Yes. Is there work involved? Yes. Are there publishers, distributors that get their hand in that pot, in that cookie jar and take some of that? Yes. People can produce music. There's royalties from that too, like in books. There's also people that reach their hands in there too. Mm-hmm. Another common way to get passive income is from the market.
Right.
People have asked me since our first podcast, what are some quick, easy, simple ways to produce and earn passive income? Not everybody can buy a house and wants to be a landlord. I get it totally. There's market investments, and I can share those today, and that's what people have been kind of asking me to share.
Sure. Well, let's get into it. What are the top of mind examples you think people ought to know about?
There are a few. I personally invest in these. My philosophy is basically, if I'm going to invest my hard-earned dollars into something in the market, the stock market, the bond market, whatever it is, I like that income. I like that bone thrown to me, basically. There's an old saying that says, when you invest money in a stock, it can be a risk. It's kind of a gamble.
Sure.
But if you invest in something that provides you regular income, that's an investment. Mm-hmm. It's an awesome saying I remembered for decades. A few examples I can pull up here on my phone. Basically, there is an awesome covered call ETF, which is called XYLD. It invests in the S&P 500, which is kind of known as the market. When people talk about the market in the United States, the broadest spectrum, the broadest market is going to be the S&P 500, which is the 500 largest companies that invest in all different sectors, financials, healthcare, just everything, consumer discretion, everything. Well, it's awesome. It goes up and down. The market goes up and down, obviously, but there's ways to get income from that. Mm-hmm. One example is a covered call ETF. It's called XYLD. Basically, year to date, since January 1st, the economy, the market, a lot of things have been down. Interest rates have definitely played a factor in stuff. Inflation, everything costs more. The Russian-Ukrainian war obviously has affected a lot of things. Energy is very high. Oil costs. There's a lot of things happening right now. This is something that I have a lot of shares of, and year to date, it's down 2.38%. Well, the index that it follows, which is the S&P 500, year to date is down 5.51%. Mm-hmm. What does that tell me? Basically, that tells me that this ETF, because it invests in covered call options, which is a little more specific stuff I can share, but basically in a sideways market or a down market, you're going to have some downside protection in something like the XYLD that tracks the S&P 500, for example. you're going to have some downside protection. So if it's a sideways or down market, you're not going to lose as much money, basically.
Right.
There's another one I'll share here in a second that kind of follows that theme. In a up market, for example, last year, 2021, the S&P 500 itself, the index returned, I think it was around 26%. Well, the share price of this did not appreciate 26%. It went up, but not as much. The way a cover call option works is basically, if someone wants to say, hey, the S&P 500 is going to be this amount, you can sell an option against that. So an investor can basically buy that, and then hopefully the share price goes up. That's what they want to happen. If you pay someone income for that option, you have the right, but not the obligation, to buy it at a predetermined price. Well, if the market's going up a whole lot in a year, the upside potential of XYLD is not going to be as strong as the S&P 500, but every month you're getting that income, which is awesome. I'm an income investor. I need the income each month to live. So it's an incredible ETF. It provides monthly income. And with a sideways or down market, like I said, which I think will kind of be the case this year with a lot of factors, interest rates, the Fed, so they're going to raise interest rates 7 times this year. Who knows what it's going to be? There's a lot of things right now. This year is going to be kind of choppy, I think, in the markets. And this is an awesome idea of how to get monthly income, not have as many losses that which might happen this year. And it's incredible.
So I want to make sure that I understand it correctly. When looking at investing in an ETF as opposed to investing in a specific stock on the S&P 500, what you're saying is the returns aren't quite as high when the market is up, but the returns aren't also quite as down when it's down. And you're getting that income from the investment on a monthly basis instead of annually, or I don't know how it exactly works with a specific investment.
Sure. With the S&P 500 itself, there's plenty of ETFs and mutual funds that invest in that directly. Well, they pay quarterly dividends. The yield right now in the S&P 500 is 1.8% approximately. Well, the yield of XYLD I just mentioned a second ago is about 10-11%. That's incredible income. That's obviously much more. For an income investor, obviously you're going to choose something like that versus directly investing in the index itself. Single stock risk you were talking about a second ago. Well, sure, anybody can invest in a single stock in the S&P 500. Apple, pick a stock.
Sure.
Could it go up or down? Of course. Could you have higher gains if it really rocks? Yeah. Could you lose a whole lot if it goes down? Yeah. Meta, Facebook, we all know who they are. They released their quarterly results about a month and a half ago. Their stock was about $270, and then it sank to like $195, I think. It's regained a little bit, but basically, can you imagine owning like a whole lot of shares of Meta just by itself, and then you lose like 25%? I mean, come on.
And this again goes back to that part of the conversation we had in our first episode where we talked about diversification.
Yes.
Because if you have all of your investments in one area that maybe consistently does really well, and so you feel really good about it, and all that return income you continue to invest in that same place, well, once an issue happens and that stock tanks, that's everything. So that's why you want, as a savvy investor, to be invested into many different areas. If you were leaning into ETFs for your investment, does that offer you protection in that way also?
It sure does. The S&P 500, hence the name, is 500 companies in a collection, the index basically. If you invest, whether you invest in the index itself or you invest through a cover call ETF, like I mentioned, that provides income, but you still hold and invest and own those 500 stocks, your risk is spread amongst 500 companies, not just one.
I see.
So obviously that is diversification. Still, it's kind of segmented towards large cap, companies that have incredible revenue. It's in stocks, not in bonds, for example. It is kind of segmented, but it's not as risky as an individual stock for sure.
Are ETFs expensive to get into?
No, they're not. Basically, like the previous video, anybody can open an account with whoever, Fidelity, Vanguard, TD, Ameritrade. You can buy one share of the XYLD I just showed a second ago, and the current price is around $49. You can literally open an account, link up your checking account, real easy to do. You can literally buy one share of that. It's magic.
Yeah.
It's awesome.
And it's just, you just go to the website of Vanguard or a different trader or investment option, and it's just as simple as that. You make an account and you can just buy one for $49 basically?
Correct. It's commission free if you buy and sell holdings, ETFs, stocks, things like that. There's zero commissions right now, which in the previous video I mentioned back when I started investing, there are commissions for everything. Now it's commission free if you do it online. If you call in, need assistance, there's a fee.
Right.
But if you do it online, there's no charge for that, which is incredible. An example is basically kind of my thoughts about passive income. Let's say the average person, has a job. Their sole income is their job. That's one source of income. And then boom, immediately they open a Vanguard account and they buy shares of XYLD, for example. You're going to get monthly income paid to you each month. You can choose to receive that or have it reinvest, whatever you choose to do. The power of compounding to reinvest is incredible. There's another ETF I'll show you here in a second that I also invest in. Well, that one also pays monthly dividends too. Right there, you have a job. You have an ETF, you have another ETF. That's 3 sources of income right there.
Right.
That's amazing.
So I want to get into these additional ETFs also.
Sure.
But before that, why don't we talk a little bit about the reinvestment angle of it? Because I think that's
Sure.
the piece where I think people can understand, okay, my income from my job, that's my one source of income. If I were to purchase in an ETF, that's a second source. But then the wealth building aspect comes in the reinvestment.
Yes.
So, and that would be something you would recommend maybe on like a monthly basis, or every time you get paid, you'd buy more?
Yes, it depends on a person's personal situation. There are some people that need income to live on, of course, at their working age, whatever they're doing. That monthly income you get from ETFs, the ones I can suggest, and of course their job, all combined, they might need all that income because kids, inflation, family, mortgage, everything costs a lot. If someone does not need the income from these market investments they choose to do, they can reinvest. They can compound interest, the power of compounding. You can look it up. It's fabulous. 8th wonder of the world. Mm-hmm. Real quick, a hypothetical example. Let's say someone is 21 years old right now and they inherited $10,000. Nice, easy number. And they got this money, didn't know what to do with it, didn't need it at that point. They had a job and their life was good, They can invest $10,000 into the XYLD, for example, right now, and forget about it. Literally forget about it. Do nothing with it. Every month, it's going to provide you income and dividends.
Right.
If you choose to reinvest that, it's going to compound. So where the earnings each month on that $10,000 is going to buy additional shares at whatever price it is, the pay date. Let that buy shares every month. Let it compound. Let it grow over time. 10 years, look how many shares you're going to own. Look how much income you get. Both those are going to be appreciating and going up in 10 years. That's how you build wealth.
Yeah, now we're talking about real wealth building kind of, not just day to day to get by. We're talking about serious income boost.
Yeah, and let's say the 21-year-old example I gave you, let's say in 10 years he or she is 31. Maybe they've got a partner in life. Maybe they want to have a child. Maybe they want to buy a house. In 10 years, who knows? Whatever the need is, that monthly income has now grown the past 10 years. That monthly income can be used to simply pay for the mortgage on their house.
Yeah.
You could basically say, oh, my mortgage is whatever, $500 a month. I'm not paying for it. Vanguard's paying for it.
Right.
It's fascinating. With CPM and the things that we offer here, it's definitely dedicated and directed towards business owners for sure. I used to own a business. I could talk about that later if we want. This is an example of how passive income has helped me in my business in the past.
Yeah.
I used to own a retail bicycle shop in California. Well, in the retail bicycle shop business, Christmas is always a great season. A lot of bikes, a lot of sales, things like that. Well, in January, it's a different story.
Right.
In January, it's cold, it's rainy, it's dark at 5 o'clock. Everyone doesn't have money to go buy new bikes and do a lot of things in January because they're broke from Christmas, honestly. There were a couple of Januaries when I had my business, sales were slow, the income was slow for that month. So basically there were a couple of times, where I would use my monthly dividend income I would get from my market investments on the side. I'd get that money. Well, there were a couple of Januaries where I was kind of lean on the income from the business. I would use that income from my passive investments to pay my lease, my rent check, Vanguard paid for it. I didn't pay for it.
Right.
So even as an individual, like we're talking right now, even as a business owner, there's many people, I'm sure, in all categories of their life that can understand the importance of multiple income streams and passive income. If you own a business, you got to make payroll. What if you're short that week?
Right.
There are ways to pay those bills with passive income.
Absolutely.
Yeah.
So we've talked about XYLD.
Yeah.
What would be one of the other ones that you lean into?
There's another one here I can pull up. It's called the RYLD. It invests in the Russell 2000. The Russell 2000 index in the United States basically is the 2,000 smallest companies by revenue and revenue cap. They're small companies. They are newer companies. Typically, the revenue, of course, is not as big as the giants like Microsoft, Apple, Google, places like that. But what's the goal of every small business? To become a bigger business,
right?
To become a medium-sized business. What's the goal of a medium mid-cap business? To become a large-cap business.
Sure.
I mean, obviously that's the goal. I also invest in an ETF that tracks the Russell 2000 index, which is the 2,000 smallest companies. If you watch CNBC or the nightly news, you'll see they'll talk about, today the Dow returned this much. The S&P 500 was up or down this much. It's a major index like the NASDAQ and the S&P 500.
Right.
It's not talked about as much because it's smaller companies, but still it's an index. Well, the ETF that I invest in that follows and tracks the Russell 2000 is called the RYLD. As I can see, year to date since January 1st, it's down 2.53%.
Right.
This also, like the XYLD, pays monthly dividends, which is awesome. I like to live on those, obviously. It's very important. Well, the index itself I'm pulling up right now, year to date, the Russell 2000 index itself is down 8.51%. What does that tell me? It's like the XYLD. It's a cover call ETF that will provide you monthly income in a sideways or down market, which this first quarter of this year has been.
Yeah.
You're not going to suffer as many losses on your investments. You still own those 2,000 stocks and you're getting monthly income. Whereas if you invest in the index itself, you would not get monthly income.
Right.
But let's say the Russell 2000 takes off this year and goes up 25%. In lieu of that upside share potential, in lieu of that, you're going to get income from the cover calls, but in lieu of that, you're going to sell away some of the upside potential.
Yeah.
That's how cover call ETFs work. There's a lot of different things people can invest in. You really got to pay attention to what's happening in the world, and what's local, what's global. This year, I have a lot of cover call ETFs that are producing me income, whereas if this was like an up year down the road or various things were happening, I might try some growth stuff.
Sure.
You just gotta, invest money where you feel is the right place to invest.
So it looks like ETFs are essentially a safer option that pay monthly dividends, and the price for that, essentially in addition to the price of the actual share of the ETF, is that when the upside is really up, you're not quite as up as you would have been if you had been investing more in growth.
Correct. You're still up.
Sure.
Oh,
sure.
yeah. I mean, last year the S&P 500, like I said, was up, I think, around 26%. The ETF previously, XYLD, it was still up. You still got share appreciation. You made money on owning a share, whatever the price was January 1st till the end of last year.
Right.
But it wasn't as high as owning a share directly in the S&P 500. But every month, the stress here is you're getting that monthly income to live your life.
Right. Absolutely.
So it's just everyone's different. In my point of my life right now, in lieu of the upside potential, I need and I prefer that monthly income.
There was an interesting perspective that I had seen recently in terms of looking at the market and when it goes up and when it goes down.
Yeah.
And how for a sort of normal person who's maybe not too invested, it's as simple as you see the line go down and you know that's bad.
Sure.
And you see the line go up and you know that's good. I was listening to some information from a more professional trader investor, and they were talking about how investors might see that differently, where when the line is down, that's when it's time to buy because it's cheap. And when the line is up, that means you're making money. Have you started looking at the market differently in terms of like the graphs going up and down, just like as an investor, since this is more your full-time thing?
Yes. Basically, let's say the S&P 500, hypothetically, let's say it's down this year so far, which is today's April 1st, the first quarter just ended yesterday. It's down, like I previously mentioned.
We are recording this on April 1st, but this is not an April Fool's joke.
No fooling, dog.
No fooling going on here. This is serious as can be. Please go on.
It's all good. For example, do I feel and believe that the 500 companies in the S&P 500 are going to really have traumatic hard times to make revenue and make money? No. But with interest rates really affect large companies, primarily all companies, but large ones, because future earnings can be affected by current interest rates.
Right.
Meaning, gosh, FedEx, UPS, gosh, pick a company I could think top of my head. Look how many trucks, UPS has to fuel up every day. Look at the price of fuel right now.
Right.
Look how many planes they have. Thousands of trucks and probably hundreds of planes. That's going to be a lot high cost for their quarterly results next quarter, hypothetically.
Right.
It all affects inflation, interest rates. It all affects everyone, including companies. Do I believe the S&P 500 is still a safe place to invest? Yes. Over time, historically, we could pull up a graph or a chart. The past, 30, 10 years, pick a year, pick a decade, it doesn't matter. The S&P 500 always goes up.
Right.
It is a good safe place to invest. I have a lot of investments in it. I think it's just fine. A lot of things can affect share prices, but yeah, it's a good place to invest.
Yeah, absolutely.
Yeah.
So I think we have a little bit of time left, and I want to make sure that we get to the ETFs you want to talk about. So we've talked about XYLD and RYLD. Are there others to be keeping an eye on?
Yes. You were talking about if things are on sale or lower price, the previous question you asked. There is another ETF I can pull up. I keep an eye on it once in a while. It's actually kind of on sale, meaning the share price right now has kind of been down the past year. It's getting low enough so where it really has kind of piqued my interest.
Yeah.
It's called SDIV, SDIV. Well, so far, this ETF year to date, it had a big downturn about a month ago, but right now it's down 5.74% for the year. This is an ETF that invests in the global top 100 stocks of companies that pay the highest dividends. It doesn't use a cover call strategy. It doesn't sell the upside potential. It simply searches the world globally, and then it picks the top 100 stocks that it can find that pay the highest dividends. It rebalances every so often, I think every quarter, I have to check. So where if one company is not doing so well, or they don't pay a dividend, or they cut their dividend, they'll get rid of that company and replace it with another one. The share price on this is actually right now $11.66. It was closer to about 15 a couple years ago.
Yeah.
Well, right now it's kind of on sale because the monthly dividend that it pays, the yield on it right now is about 10%.
Yeah.
That's awesome. Getting 10% return on your money in the simple income. The SDIV would be kind of a simple income play, purely income. It doesn't follow an index like the S&P 500 or the Russell 2000, which are kind of safer, broader market indexes. This is kind of like a global play. This actually has, like I said, the word global, has more holdings in other countries too, unlike the S&P 500, for example.
Right.
This is kind of more of a speculative play, but it does produce monthly dividends. It has for 10 years, I think I saw on the website. I'm looking to buy some shares of that here very soon. If the share price kind of stabilizes where it's at right now, the dividend is secure, I'm just going to say, here's my money, give me 10% income on it. That's okay with me.
Okay.
Yeah. There's many more I could talk about.
No, absolutely. I think we're probably running up pretty close to time, but I just want to make sure, we've seen the response, we've seen the reaction. So
Me too.
No, I don't think it's a spoiler for anybody that this is not the last time we're going to be having this discussion.
Sure.
Maybe a little bit of a tease on what you might want to talk about the next time.
If people want to hear more common income ideas, I can go in more into detail, which will be a whole conversation about real estate, the pros, the cons, investment real estate versus your primary residence, ways to get free money off of owning real estate. There's also some things I do with credit cards, of all things, to get free money.
Yeah.
A good credit score definitely helps with that. There's some other alternative ways that I simply know about and I do to get passive income, which is income I don't have to clock in and work somewhere for.
Right.
Whatever the feedback is on this, we can talk about more market investments. There's other ETFs that produce monthly income, invest in different things. Some more risky, some less risky. It just depends on the person's appetite for that. But there's so many opportunities right now to get passive income from the market. That's the quickest, easiest way any viewer can basically say, okay, I want to do this. How do I do it? Open an account with a brokerage firm, Vanguard. I keep plugging them because I have them for 20 years. Have your checking account, link it up to them. Bam. You can invest money from your checking account, send it to them, invest online, and the 2 ETFs I mentioned today, the 3 even, boom, you have simply monthly income, which is fabulous.
Oh, that's fantastic. Yeah. Obviously, there's no shortage of topics in this area. I know we'll be having you back. We appreciate you coming in again.
Appreciate the invite.
And you guys wanted the specifics. We got into some specifics. Hopefully, this is useful to you guys out there. Vanguard or another trading organization, XYLD, RYLD, SDIV.
You got it.
There you go. There's 3 you can look at right now. Go check them out. See if this is something that fits into your financial strategy and the needs of your family and the needs of your income and that kind of thing. Just a little bit of something to get you started if you're like me and you're interested in diving into this and learning some more about investment and putting your money to work for you. So not the last time we'll hear from Bill Hickey. We're happy to have him back. We were happy to have him last time. I'm already excited to have him next time. So Bill, thank you once again.
Right on, Bringster.
Pathways and Means. See you next time.
Bam.
Thanks so much for listening. We hope you found today's episode informative and inspiring. If you liked what you heard and you'd like to hear more, visit pathwaysmeans.com to check out a ton of additional content from the CPM team. You can also find us on Facebook, Twitter, Instagram, LinkedIn, and TikTok, where we post daily content and engage with creators like you. Signing off for Pathways and Means, we'll see you next time.